All right, good morning, everyone. We're going to get going. Okay, we obviously had a relatively significant pullback yesterday in the States. First, I think 1+% down day we've seen in quite a while. It kind of followed a little bit on the back of some disappointing ADP numbers and ISM service numbers. I think that obviously there's a little bit more to the story than that. Obviously, also we kind of failed to punch through all-time highs in the S&P. We got to all-time closing highs. We didn't get all-time highs intraday. And the market's really backed off a little bit, obviously led by resources. But we had defense contractors, which is interesting in the States, that traded really, really well on the back of this whole situation in North Korea at the moment. You had Defense Secretary Chuck Hagel that said yesterday morning that they were sending anti-missile systems to Guam in response to the North Korean threats. So something I think very interesting to pay attention to. What's more interesting, I think, is the fact that all this is apparently, they're saying this is going on, which I really don't think the market's taking it all that seriously as a threat. But at the same time as this happening, the oil price fell significantly yesterday. Gold price fell significantly, which typically worries in the Middle East. That's not what you see. So something to look out for. I guess North Korea is not really in the Middle East, is it? Anyway, Asian markets trading down most of the morning. We had a big reversal that happened late in the session in Japan, and that came on the back of newly appointed Governor Kuroda in Japan, with his first policy meeting and launching a 7 trillion yen per month easing campaign. What's really interesting, I think, out of that is you've seen zero effect on commodity prices really since that's happened. And to me, what's even more interesting is that even prior to this, after yesterday's sell-off, if you looked at the currency markets, you wouldn't have had a clue that we sold off in the equity markets had you not looked. I mean, we saw zero unwind for the most part in currency markets. In fact, I mean, the Aussie dollar was trading still near 105 after the sell-off. This morning, I think it's weakened on some recent numbers that came out there. But bottom line is the market's not really showing signs of stress in my mind. So I think it's important to really take cognizance of that. Morgan Stanley also is predicting iron ore now is heading toward its first surplus in the last decade. Basically there's a lot of new supply that's coming online toward the back half of the year. Everyone kind of knows this. I think this is very much baked in the price. We've fallen 15% since February in the iron ore price when a lot of these downgrades started to happen toward the back end of February. And I think it's something to pay attention to. Commodities across the board are really getting hit. But I think there's a bigger story than that, to be honest. I think the real story and the reason why we're seeing this sell-off in commodities is because of the fact that U.S. data and the U.S. is really turning so nicely to the upside in terms of we've seen GDP estimates that have been upped. We've seen the jobs numbers that are coming in better. The economy is doing better constantly, and now you're starting to get some commentary out of a lot of the Fed members saying maybe we can pull off toward the end of this year, that kind of thing. And you're starting to see the QE trade totally unwind. For you guys that were around 3-4 years ago when we started getting QE, we saw an endless pump up of stocks like Billiton's and Anglos and all the other miners, and I think you're starting to see that trade totally deflate now. So I think that's what's happening. China, we had a public holiday today, so we didn't see anything there. Australia's building approvals that were worse than expected. That got the Aussie dollar weaker a little bit. Obviously, the BOJ target rate remained the same. We've got PMI across the region in Europe today. We've got interest rate announcements in the UK and the ECB today, and then we've got initial jobless claims out of the States. I actually think that we're starting to get I think there's starting to become an outlying chance with a lot of the data that's been coming through in the ECB that we actually may see another interest rate cut there. I'm not saying that's going to happen today, but it's something to watch out for. You may see a little bit of a shift in jargon today from Jean-Claude Juncker. Isn't that is it Draghi? Sorry. No. Okay, my bad. Sorry, I'm mixed up here. Anyway, so you may get a little bit of a shift in commentary out of Draghi, and and something to watch out for today, because that could have a material effect on markets. It would be a big positive, I think, for the eurozone if he does start to shift sentiment there a little bit. All right, let's jump into the maps. Okay. First thing I wanted to have a look at is what one of the bigger movers was yesterday. Oh man. And that's gold. I think the shares have been screaming at us for weeks that the gold price is going to take a massive correction. And you can really see here, I'll draw the line, but really you can see how well defined the bottom end of this support level is. I mean, if you look at it long term, and you can go back another 5 years, this would just be an upward sloping trend line, and then this is just, to me, a massive flag. So it's actually still a very bullish pattern. And we've come down here and we've tested between 1540 and 1550. We've tested it. You can see how many times we've tested it in the last year and a bit. And we've been here a couple times since this year's began. We have bounces, but the bounces keep getting smaller and smaller and smaller. The way the shares are behaving recently makes me think that we're going to get a breakdown through this level. In my mind, we'd be looking right around here, call it 1536 on the 1535 to 1540. We really need to close below, I'd say 1535, to really signal a break in gold. And if gold breaks here, it's really the physical side of gold is going to get ugly. So I think it's really important that we watch this one really closely. I think this is, in my mind, it really is a foregone conclusion, seeing as how most major gold miners have fallen 30% in the past 4 to 5 weeks. So I think, but something to watch out for. Keep a very close eye on the gold market over the next couple days. All right, Exaro, I just want to go back to this one. We had talked about this a whole bunch of times. This gave us a bunch of fake breakdowns where we just got below it, and some of these days we really wicked way down below it and then managed to close up hard. You can see that big reversal bar yesterday, huge red candle, and we closed down at 57.5 on Exaro. I mean, this breakdown to me is very important. Really, in my mind, it opens up possible 20 rand and downside in Exaro. At the very least, I think we can trade back down to previous lows at 146, previous closing lows. But I think I think potentially we have even more than that. I mean, I think we could see $140 out of Exaro in terms of the technical breakdown. All right, another commodity stock I'll show you as well that broke down yesterday is Impala. Impala, we've been talking about this one. The level kind of between 138 had really been kind of the pivot point here. We weren't able to ever break above it really on a closing basis, and 132 was very clearly downside. Was very clearly the downside bottom end of the range. Is really probably call it 132.50. We broke through it yesterday. As soon as we got through, you can see we just absolutely collapsed, and we closed down. We actually closed up in the auction, I think, but we were trading around 128 just before the auction. One of these to watch. I think it's same thing as some of these others. Foregone conclusion that we at least test the lows of the past several years. You can see there that's at 125. I'll actually jump back to 5 years. I mean, this is important. I'm going to show you a couple of these that we're looking at 5-year lows and resources on a lot of these stocks. I mean, you have to go back to 2008 to find 125 again. Obviously, we got there middle of last year, but if we get below 125, I mean, I think the bottom's really going to drop out. So 125 and Impala is very important level to have a look at. I'm going to stay on the 5-year chart, and I'm going to show you Anglos. We talked about yesterday, if we closes below 233, that would be a warning signal that this thing could really break hard. I mean, it's really important. Again, like I said, the fact that we've broken this level, very bearish. We're looking at a new closing low, and Anglo's going all the way back to 2008. You can look at it there. You can look at it in the pound price. This is a new closing low all the way to 2008 in Anglos, and it's horribly bearish. I mean, it's screaming at us that not to take these things on the long side, even though it's so freaking tempting because the thing was 285 rand probably 4 weeks ago. So something to watch out for today. I mean, if these things don't regain that level at today, I would say, then I think that they've got significantly lower targets in the near term. All right, another one I'm going to show that broke down yesterday is Tiger Brands. It broke our support level that we'd been looking at for a long time now. Around 286, 287, something like that. We had a nice big red bar that ripped through that. I think at the very least we could see a test of where we broke out to the not broke out to the upside, where we started this uptrend from, which is 270 rand. It's reasonable downside from here, 13 rand 50. I wouldn't be surprised to see it from there, and I really think that's an initial target. It could trade significantly lower. All right, another stock breaking support yesterday was Investec INPs. Very clearly defined support here around 63.90. You can see there we finally broke through it as of yesterday. To me, this thing we really could trade back a little, down to. I mean, the target from this sort of breakdown should really be the same sort of move from what the pattern above the breakdown was, which is about $6. So we're probably looking at 58 rand. But if things were to really get, which is down here, if things were to really get ugly, we could obviously be looking as low as 54. So, all right, and that's it for SA. I'm going to just show. I'm going to show a chart in the States. It's an ETF. It's the agricultural ETF. And I'll just show you. This is, I think, incredibly important. You can see here how the ag ETFs have traded to the downside here. And we're testing multi-year lows on agricultural ETFs. This is actually not a negative. I think it's a real positive, in fact, for things globally. But I think what's really important to note out of this, and it goes along with all of our theories today with the resource plays and the gold plays, is that there's no inflation. You're not even getting food inflation, well, except for in South Africa, but that's probably more wage-related. But not even getting food inflation in terms of ag commodities. If you look at this chart, I think it's quite clear. And we are we essentially closed right at all-time low, or not all-time lows, multi-year lows yesterday in the DVA ETF from ARCA. So I think it's something really, really important to look out for. Regardless of what we say, in my mind, this is bullish for markets going forward, but it's proving to us that there's no inflation. That's why I think the ECB can come and cut. I think that's why the gold is screwed, and a lot of people are still long a gold, and you got almost $200 billion still in that gold ETF in the States, which when that unwinds is going to get ugly. So I think this is really fits in with the thesis of everything that we're talking about today. And that's it for today, guys. Thanks a lot.